highest down payments yet. So just in time for spring, we are now seeing the return of the low down payment loan. This is the thaw of the credit freeze. And it's not just FHA, it is conventional loans. Sources at Fannie Mae tell us now that the mortgage giant is buying more loans with down payments between 3 and 10%. That share was about 15% at the beginning of last year, but it has been rising steadily to 17 and 18%. Now it's probably closer to 20%. FHA loans are just getting more expensive because facing a $16 billion shortfall, FHA raised its insurance premiums and will again on April 1st. Now, Fannie Mae does require mortgage insurance, private insurance on these loans, but if you do the comparison shopping, you can also actually find that the private insurance will make the loan cheaper. Now, the private mortgage insurers are also loosening up after getting slammed during the housing crash. They really tightened their underwriting standards, but now as home prices are rising, they are beginning to ease those standards. And there are just more buyers now, especially first-time home buyers who really need that low down payment loan. So bottom line is, with mortgage rates rising, that means there's going to be a lot less refinance business for the banks. Where are they going to go looking for the new business? At the home purchase loans. And they may be again loosening and offering those low down payment loans. Of course, we've got more online, realtycheck.cnbc.com. Bill?
All right, Diana, stay there. Let's talk about this.
That's right. There is an argument that these very types of loans got Fannie into trouble in the first place. So are we doomed for another housing disaster? George Mason University distinguished professor Anthony Sanders says we very well could be. But U.S. Loan Mortgage President Fred Glick counters that these loans are safer and very much needed in this recovery. Welcome to you both. Anthony, I'm going to start with you if I can.
Sure.
You know, you say that basically this is a repeat of the cycle that we saw before. Others say it's a little bit different this time. The economic underpinnings are different as well. So why do you think it will be a repeat of what we saw previously?
Well, the economic underpinnings are actually worse than they were during the housing bubble. But here's the problem. It's not that I have any problems with low down payment mortgages. That used to be the domain of the FHA, first-time home buyers, and minority communities. But now we're seeing Fannie Mae, and probably Freddie Mac, but Fannie Mae at this point creeping back in. This is what we call mission creep. So we have Fannie Mae doing the mission that the FHA was set up to do. And maybe it's because FHA is too expensive, but again, where's Mr. DeMarco, who's trying to tell us that we're not supposed to be cross-pollinating in these various markets?
Let me go to that soft-spoken mortgage broker sitting there next to you. Fred, why do you guys need these low interest or low down payment loans again? This is a market where the growth is still with the first-time buyer, with the people that need a loan right now. This is not a mature market by any means where you have to start reaching for the less qualified buyers.
The underwriters today are still the mortgage Nazis. Okay, I'm sorry. We get ridiculous conditions on loans, no matter if they're 40% down or 5% down. Couple of things. Number one, the low down payments are necessary for the first-time buyers so we can have the second-time buyers moving up, so the billionaires can have their houses. Okay? Dodd-Frank has been imposed, so we have a 43% back-end ratio limit. We have a 640 minimum credit score on FHA. And to get a 95% conventional on Fannie and Freddie deals, you have to have 680. You can get what's called LPMI that's built in, and wow, it's great. Then people can have a lower mortgage payment so they can make the payments easier. Right. You know, we've been going through FHA for a long time. It's had its issues. Instead of raising the upfront premium, they're raising the monthly to make it harder. We've had USDA and VA loans that have been no money down forever.
Okay. So Diana, can you address some of those issues?
With my concern on this one?
Sure.
Go ahead, Diana.
My concern here is not that it's going to be the loans that are going to be in trouble by Fannie Mae's loans, the ones that they're buying. My concern here is for the FHA, because FHA guidelines, their underwriting is lower. Their scoring is lower than the conventional loans that come from the banks. So if you have the higher credit-worthy borrowers going to the banks and Fannie Mae for these low down payment loans, then you're leaving the lower credit-worthy borrowers with the FHA. The FHA doesn't need that right now. They need those higher credit-worthy borrowers to offset that $16 billion shortfall they're looking at from delinquent loans.
Fred?
That's true, Diana, and they should have gone to a higher upfront MIP. They should tier it a bit based on credit scores, and now you're not going to have any of the 580 credit score junk that we've had for years. You got to have 640, which is maintainable. if they have the 43% back-end ratio and not to like 50-52 that some of the people were doing. So the criteria has come down a heck of a lot, and I think the new originations are going to be fine because they're going to be a lot better borrowers in the FHA. We're going to get rid of the junk that we used to have. Now, I'm not the mortgage pope, but hopefully this will be better.
Fred's contention is that the government's in the way with a lot of these regulations and requirements and things. Are these well-intentioned regulations or what are stymieing people being able to buy a home right now?
Well, I would absolutely agree with Fred on that. It is, in fact, the government's in the way. But again, having Fannie Mae now replace in the shuffle FHA, I agree with Diana on that. We may just be bifurcating the market and just setting FHA up for a harder fall. The issue is that with Dodd-Frank and other things, the government is just like sticking its foot out, waiting for the housing market to trip. And in these economic conditions, I don't think that's a good idea.
All right, folks. Thank you. Fred, we'll let you get back to work. You got more mortgages to write.
Yeah, quite a few apparently.
See you later.
All right.
Thanks, Diana.
See you guys.
Well, Granny may not be going over the cliff. What